which are likely to generate a business of about 1 lakh crore rupees, according to the Confederation of All India Traders. Around 50,000 weddings will have a budget of 1 crore rupees or more. A similar number will have a budget of 50 lakh to a crore. 6 lakh weddings are expected to cost 25 to 50.
You're watching BTTV. This is Market Today. I'm Tanya Aneja. And with me is Shail Bhatnagar, our markets editor. Well, Indian markets continue to remain volatile amid raging crisis in the Middle East and the ongoing earnings season. But where are the pockets of opportunities and what's really next for the Indian markets? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to trade sideways to weak on Friday as traders will remain light ahead of the weekend, and second quarter earnings will decide the fate of sentiment on the Wall Street. Traders and investors are now extremely cautious on high beta PSU stocks as bullish sentiment nosedives on the Wall Street owing to stretched valuations and the ongoing war in the Middle East. Strong crude oil and gold prices point to a risk of trade in equities. Very good morning, Shail. And it's Friday. It's Friday finally. If we talk about Indian markets, Nifty now enters last week of October's FPNO expiry. And if you see the current performance, it has lost almost 0.8% so far in the month of October. We have raging crisis, as you rightly pointed out, in the Middle East, and of course, the ongoing earnings season as well. So I want to now understand from you that what should be the strategy and where are the markets headed?
Good morning, Tanya, and a very warm welcome to thousands of viewers who joined us from different parts of the globe. The weather, as they say, in north part of India is really, really fantastic, but I so wish that this was the same across the Wall Street as well. We are seeing a risk of trade, Tanya, coming into the markets as far as equities are concerned, and you can easily see it with the rise in crude oil prices as also the surge in gold futures. So these two put together and the fact that, there is a raging conflict in the Middle East are sort of hampering the long side positions on the Nifty, on the Bank Nifty. And of course, a lot of profit booking has been triggered in the entire PSU basket, which was at the forefront of gains over the last 2 or 3 months. And if you see how charts are structured, yesterday the Nifty lost 46 points, 19,624. The day's low was somewhere like 19,530. And whatever rally that you saw towards 624 was triggered by short covering because of the losses on Wednesday. So that's how the markets are structured. I don't see any fresh momentum on the long side. And any rise that you see in the market will now be met with further sales. And that's also visible in the way the broader markets are structured. If you look at the index heavyweights, none of them, none of the 10 index heavyweights that we track, which is Reliance, Infosys, the 4 banks, Hindustan Unilever, ITC, none of them show any upward bias or long side traction. In fact, there is long unwinding and build-up of shorts in the major index heavyweights. So these point to the fact that bears are gaining ground on the Wall Street. And if you look at the options chain, you see a very strong support now coming in at 19,500, 19,400 on the Nifty. And of course, the resistances are moving lower. So the trading range is now shifting lower. At the moment, 750 to 700 on the Nifty is looking as a very, very strong resistance. The Nifty, of course, is now below its 20-day moving average, and that points to a reversal of trend. From strength, we've now moved to weakness. Tanya.
Okay, absolutely. And what about Bank Nifty share? Let's discuss that as well. If you see, the index narrowed its losses to end down by 134 points yesterday at 43,755. So, what are now the fresh support and resistance levels according to you?
So, Tanya, when you look at the Bank Nifty, it's somewhere like it's early September lows, and it's one of those major indexes that is, really, really weak. Again, the conflict in the Middle East, the U.S. 10-year bond yield, fears of global inflation coming back are all hampering the Bank Nifty. And the problem here is multifold. Strong earnings are met by sales, and when you look at how the index moved yesterday. It shut shop at 43,754. All four private banks, which is HDFC Bank, Axis Bank, Kotak Bank, and of course the top PSU Bank, State Bank of India, show no traction on the long side. In fact, if you look at HDFC Bank, it is at an 11-month low, and it has more than a third, 33% weightage in the Nifty. So if that is, at 11-month low somewhere like November 2022, what can you expect from the market? Well below 200 DMA as far as HDFC Bank is concerned. And the Bank Nifty is definitely headed towards 200 DMA. You have the chart in front of you as far as the daily close is concerned. And the 200 DMA at the moment, as far as the Bank Nifty is concerned, is less than, it's at 43,500, 43,400, and we're already at 44,750. So one downtick and 200 DMA will be tested. So that's the reason why there is a bearish kind of a move on both Nifty and Bank Nifty. Choppy and volatile trade expected today. It's the weekend ahead, and therefore trading will be light. Tanya.
Okay, absolutely. That was Bank Nifty for you. But, we are just waiting for Mayuresh Joshi to join us, and, he'll tell us more about the market outlook and everything. But meanwhile, Shell, why don't you tell us about FNO space today? I mean, what are you looking at in the FNO space, and which stocks one should watch out for?
So, Tanya, again, like I said, the market is purely defensive. There is nothing in index heavyweights on the long side. If you look at the Nifty, I would imagine the auto space is the strongest. We saw a breakout trade in Bajaj Auto happening yesterday, record high. In fact, at 54,850. Not only was Bajaj Auto the top gainer in the FNO space, but also on the Nifty. So 6.5% higher. And this is accompanied by, Tanya, a 27% surge in open interest. It's a very, very rare instance where you see this kind of a move coming into an index heavyweight. So Bajaj Auto, definitely. Any dip there should be purchased. We had discussed Tata Motors in the earlier part of the week. All dips there have been taken very strongly by fresh bulls. As of course, Hero Motors 3271. It's following the track of our top play, Bajaj Auto. So two-wheelers were the ones that really shot up in the limelight and in trade yesterday, and these are the two stocks that need to be looked for. And IndusInd Bank, one of those rare bright spots that is there in the Bank Nifty space. The index, IndusInd Bank, at 1452 was the top gainer in the Bank Nifty yesterday, 2% higher. The charts are fairly strong, and we have been following IndusInd Bank on the long side for about a month, and the trend seems to be getting stronger and stronger as far as IndusInd Bank is concerned. Tanya, one interesting point I wanted to mention was that the top three private sector banks, HDFC Bank, Axis Bank, and ICICI Bank, are all down in the month of October, about anywhere between 1 and 4%. And it's IndusInd Bank, which is up 2%. So it's a reversal. It's a contra trade on IndusInd Bank on the long side. And any dips here are most likely to be taken by the bulls.
Okay, absolutely. Shell, global markets also, let's discuss them as well. So US markets, if you see, US stocks ended sharply lower on Thursday. We have shares of Tesla that fell after its results, after its weak performance, and of course the Treasury yields. They surged after Federal Reserve Chair Jerome Powell spoke about monetary policy. Now Dow fell around 250 odd points to 33,414. S&P lost around 36 points and 0.85% lower at 4278. That is the level on S&P 500, and Nasdaq also lost 0.96%. Shell US 10-year bond, US 10-year bond yields that surged to 16-year high, near 5%. So, what is now essential to track from all these overseas cues?
Tanya, just two things: crude oil and gold.
Okay.
You'll see both the charts in front of you. Crude oil is now, especially Brent crude, is now above $93 per barrel. That was the last time I checked it. Yes, 93.25. This is the highest level since 2nd of October. These moves are coming fairly strongly. And if this is cleared, then you'll see crude back at a 10, 11 month high. And of course, safe haven buying happening across the world when it comes to gold futures. They are their highest at about $91 to an ounce, well in position to cross $2,000 per ounce. And this price was the last time you saw. It was in August of 2023. Just 10 days ago, gold was trading at 1822. This was before the sad events that happened in Israel. And say 6th of August, uh, between 6th of October and today, you've seen a blowout that's happened, 1990. And of course, beyond $2,000 per ounce is what is likely to happen. Pre-open trades are in front of us, Tanya. Let's look into them. The Nifty opening 30, 31, 41 points lower, 19,583. Let me very quickly look at where the numbers are at the moment. I'm very keen to look at what HDFC Bank is doing. It's right there in front of you. And that's how it has opened. Just a moment, please. I'm just looking at the numbers. The software seems to be creating a problem. Just a moment, please. The Nifty down 56 points. And let's look at the top news. State Bank of SBI Life 1.67% lower. M&M down 1.5%. Bajaj Auto giving back some of those gains, 6% up yesterday, now trading about 1% lower. Let's look at the index heavyweights. I want to see what TCS is doing. Flat 34.56. How about Reliance? Reliance is down 0.33%, 2299. Let's look at what HDFC Bank is doing. HDFC Bank is down 0.66%, 1505. The pain on the Nifty is now deepening, 70 points lower at 19,552. Remember, Tanya, the low of Thursday was somewhere like 19,512. Let's see whether that holds or not. At the moment, 549 in front of you. Let's look at the other spaces as far as markets are concerned. Beyond the heavyweights, we look at the FNO space, and let's see what the action is. Okay, UBL, a rare stock to trade, but up 5%, 1650, 10,000 shares have been traded. We'll be discussing Coforge's earnings today. The stock 1% higher, 51.65, fresh record high happening here. What about the most active counters? Okay, earnings stock, Voltas and Havels. Disappointments here, 3% down on Voltas, 810. We have Havels down 2.8%, 1324. This is how the markets are opening. Anything that you've seen, Tanya?
So basically, Shail, first of all, let's welcome our guest on the show today. We have with us Mr. Hemen Kapadia, who is the Senior VP of equity at KR Choksey Stocks and Securities. Good morning, Mr. Kapadia. Always good to have you on our show. And I want to now understand from you that how are you approaching markets at this point in time, and what's really next for the markets, because we are seeing that markets are volatile. We have escalated tensions in the Middle East, then we have this ongoing second quarter earnings also. Okay, I think he's not able to hear us, but we'll get him on the show in a while. And Shell, let's discuss some of the stocks that will be in focus on the back of their earnings. So HUL that reported better than expected numbers yesterday. It reported a standalone net profit of 2,717 crore rupees. Let's see how the stock is doing in the pre-open. I would request my PCR team to pull up that stock for us. So profit, if you see, it's up around 4% on a year-on-year basis, and the revenue also is up around 3.5%. ITC, if you see, the numbers were mixed. The company posted uh, the cigarette volume growth of 4% and the top line growth of 3%. That disappointed a bit, but bottom line growth that came in line with what the street was expecting. And let's see how the action pans out for this particular counter. Right now it is trading in the red. 449 is the level. Remember, experts have been bullish on this particular counter, and let's see how the action pans out. But we have Nestle also that will be in focus on the back of numbers. Nestle, if you could pull up the stock and see what the stock is doing in the pre-open trade, it reported a 37% YOY rise in its profit at 908 crore rupees for the September quarter. It is up from 661 crore rupees in the corresponding quarter last year. So this was Nestle, and apart from that, there will be some other stocks as well. Let's see what Zomato is doing. So basically, according to a report, SVF Growth Pte Limited that is likely to sell a stake in Zomato worth around 1,000 crore rupees. So let's see. Right now, the stock is in the green. 114 is the level, 2% uptick there on Zomato. This stock will be in focus. And remember, there are some other stocks as well. Jindal Stainless Steel, this stock will be in focus on the back of the numbers, the Q2 performance. It has recorded a 74% rise in its profit at 609 odd crore rupees for the September quarter. And as you can see, a sharp uptick, 4%, 469 is the level where we are at on Jindal Stainless Steel. So that's the stocks, Shell, that will be in focus. Anything that catches your fancy?
Tanya, the Nifty settled 82 points lower at 19,542. Remember, the low for Thursday was 512. Let's see how that happens. And 82-point gap down on the beginning of the last week of FNO expiry is not something that looks good. But as we have taken the gains in our stride, we shall also take the losses in our stride. As far as prices are concerned, ITC is down 1.2%, 445. HDFC Bank is down 0.7%, 1505. Reliance at 2300 is down 0.3%, and Infosys is down 0.25%. In fact, all 10 index heavyweights, Tanya, as I was telling you, that all of them are showing either build-up of shorts or unwinding of longs. That's what has happened, and that's a fairly weak opening as far as 19,542 is concerned. So the bulls and the bears will battle at 19,500, 19,450, 19,400 as far as options are concerned. And that's how the markets are. Let's look at some other prices, Tanya, that seem to have come up. Let's look at the PSU basket. I'm very keen here to look at prices. NBCC was yesterday's star, up 2.2% in pre-open trade, 72.25. We have NIACL in the green, Engineers India in the green, J&K Bank in the green, RVNL, GRSE, Aircon in the green. How about some real strong high beta stocks? Okay. Let me take some names. Zomato 2% higher, 114, you marked it. Medanta 1.6% higher, 788. We have Tejas Networks 1% higher, 890. BSES a percent higher, 1540. So these are the moves that are coming in. Nothing much happening, Tanya. People are just waiting for the markets to open and see where money is going to be made. Let's look at some other stocks that we track. Frankly, nothing much, Tanya. We'll wait for the markets to click. What are you doing?
Actually, Shell, as you rightly pointed out, UBL, this stock will be in focus, and the company posted a good set of number. The company posted second quarter numbers, so the profit came in at 107.6 odd crore rupees, and it fell around 20% if we compare it with the corresponding quarter of the previous fiscal year. And the numbers are below the expectations. So I want to see what UBL is doing now in the pre-open trade, because this stock will be in focus. Voltas, as you rightly pointed out, one such stocks. So despite weak quarter, UBL is up in the pre-open. 1610 is the level and 3% uptick there. Let's pull up Voltas also and see what this counter is doing. Okay, this is 2% down. So the company posted a profit of 35.68 crore rupees, and this is, remember, against a loss of 7 odd crore rupees in the same period last fiscal. So the profitability in the second quarter of FY23 was impacted by an exceptional loss of 106.43 odd crore rupees. So this is the statement coming in from the company. So this stock will be in focus. Signed will be focused as well after the Q2 show. Now the company posted a profit of 178 odd crore rupees. Okay, so we are seeing a green tick there on Signed, and 1797 is the level, 2% uptick there as well. So these are the stock share that will be in focus, ahead of that will be in focus post their second quarter earnings.
Fair point. And let's look at the.
Yeah, I guess we should wait for the guest to just join in and carry forward this conversation.
I'm enjoying a very nice cup of tea, and it's just the right weather in Delhi to have loads and loads of tea. As far as Nifty,
okay, I think we have Mayuresh Joshi, Shell. We have Mayuresh Joshi with us now. The team has fixed the technical glitch that we have been facing. So he's the head of equity research at William O'Neill India. Mayuresh, very good morning. Finally, so good to have you on our show. Sorry for the technical glitch. But let's start with your outlook on the markets, and I won't waste much of our time now. So over to you. Could you please unmute yourself, Mayuresh? Yeah, please go ahead.
Yeah. So can you hear me?
Yes. Now we can.
Morning, Tanya. Morning, Shail sir. I think technical glitches are a part and parcel.
Yes, absolutely.
Markets are bracing themselves for all the geopolitical developments that are probably happening and any expected escalation so on. So I think it's more a range-bound trade for the markets. Domestic flows continue to be extremely strong, offsetting FII selling that we are probably seeing. Yes, bond yields in the US, the expectations in terms of Powell's speech yesterday, which means higher for longer, assuming economic conditions to probably deteriorate a little bit more to see inflation come down, might have impact on demand and earnings. And some part of that might get hit on export-oriented. But I think domestic-related sectors, consumer discretionary spending, festive season, elections, I think there is huge amounts of news-related developments happening in the next few months. So the volatility for markets are expected to continue. But again, a range-bound trade is something that we.
Fair point. And it's 9:14. Mayuresh, welcome. I'm sure there's more action on the cricket field than on Dalal Street. And we are enjoying both sides of the trade. Markets are ready for a fairly strong drubbing as far as pre-open trades are concerned. Anything that you would catch which is falling down and add to your portfolio?
So I think cement stocks look pretty interesting, Shel sir. Our take is that second half, the consumption should start growing at a very good pace. A lot of projects will see further acceleration happening as we head into the second half in the next few years as well. Having said that, large caps, obviously Ultratech is something we continue to probably have a positive stance on. Within the mid cap universe, Star Cement has a reasonable amount of cement capacity in the northeast. A lot of development activity, as we are hearing on ground, expected over the next few years. Clinker capacity also pretty decent. No debt on the balance sheet, expected to grow at a reasonable pace. Just falling short of time, so I just stop here. So Star Cement probably remains that nothing.
Right. And as good a time as any to start looking at opening quotes on the Nifty. Gentlemen, it's not looking good. It's a 100-point cut on the Nifty, and it's at 19,525. Remember, yesterday's low was 19,512. It will be taken out. 19,518 so far. Let's look at stocks that are causing this pain to the Nifty. Okay. First of all, HDFC Bank down 0.5%, 1508. I need to see Reliance 2299 down 0.3%. Let's take a look at Infosys 1428 down 0.42%. Which is the top loser in terms of index heavyweights? It's Hindustan Unilever down 1.5%, 2510. Bajaj Finance is bleeding 92 rupees, 7750. How about TCS? TCS is flat at about 3453, and the two other banks, ICICI Bank and Kotak and Axis Bank, are down about 0.5% each. 931 for ICICI and 988 as far as Axis is concerned. The first support level on the Nifty at 19,535 seems to be holding ground. Let's shift focus to FNO stocks immediately. All 10 stocks, as far as the index heavyweight are concerned, are in the red. With that background, let's look at the bank Nifty down 120 points, 43,634. Within the FNO space, there seems to be a strong uptick on UBL, 3.5% higher, top gainer. Ultratech Cement, as Mayuresh was pointing out, cement is in a strong uptick, 1% higher, 85.97. Hind Copper, 1.5% higher, 159. Federal Bank, 0.5% higher, 147.70. Coforge in the green, 0.5% higher, post earnings, 51.40. Let's shift focus immediately to NSE 500. The Nifty at the moment is 19,540. So the 20-30 point near yesterday's low is where the battle is at the moment. Okay, Tanla Solutions, post earnings 7% higher, 1,100 points. You have NBCC 2% higher, 72.30. Ircon ITI in the green as far as the PSU basket is concerned, 1.5% and 2.5% higher. RBNL is sticking away merrily in the green, 1.5% higher, 169.25. Strong gains coming on Bombay Stock Exchange, 1565, 1.8%. That's how the market has opened. Nothing much here in terms of top gainers or so. Let's look at the Nifty and the stocks that are helping the Nifty on its way up. Nothing great except for Tata Motors and Bajaj Auto, both in the green. Remember, auto was something that really took away the market's breath. Coming to you, Mayuresh, what exactly happened on Bajaj Auto yesterday? How are you looking at the stock? And we'll shortly go to Hemant Kapadia as well. He's joined after a great effort by our PCR team to get him online. Mayuresh, to you first, Bajaj Auto.
I think numbers were pretty decent, and the management probably sounds very optimistic for the second half on two counts. One, in terms of the new launches that they're doing within the domestic stable, very good response out there, and therefore the expectations of reasonable volume growth with the festivities expected to have a good say in terms of demand, and the expectations in terms of better realization should hold up the domestic revenues. As far as the export markets are concerned, both two-wheelers as well as three-wheelers, a lot of stickiness that we probably saw in the last 2 or 3 quarters supply chain issues, currency related issues, some domestic regional issues that were there that were plaguing the overall numbers. That should probably start coming back to normalization levels, which means the overall consolidated numbers should be reasonable enough. And the expectations in terms of input costs actually remaining stable year on would mean margin stability as well. So I think the street is probably expecting better numbers and stable numbers to probably start getting delivered, and therefore the kind of positive response that we're probably seeing on this.
Okay, absolutely got that. And now we also have with us Mr. Hemant Kapadia, who is the Senior Vice President at KR Choksi Stocks and Securities. Good morning, Mr. Kapadia. And I want to know it from you that how are you positioned on Nifty at this point in time, and what are your top bets for today?
Thank you, Tanya. Thank you for having me on the show. Very good morning to Shail. Um, well, there is the obvious overhang. Indicators are wobbly. I mean, world markets have obviously come off, so crude is up. Frankly speaking, US 10-year is at multiple year highs. So near close to 15-year high. So frankly speaking, everything is gloom and doom, at least in the near term. Having said that, as far as levels are concerned, 19,524 is important as far as the Nifty is concerned. We close below that, I think yes. Then we see 19 to 15 in Jiffy. It doesn't look like doing that today. There has been a negative gap, which I believe should get covered from an intraday point of view. Coming back, can I draw your attention to probably a week or 10 days time? We've seen a island reversal in the Nifty 2 weeks back, and that level is a bullish formation. That level is still held firm. Distinct weakness as far as the bank Nifty is concerned. 43,600, 43,400, very strong support levels. The VIX is down a bit from yesterday's high. So frankly speaking, and I think Shail also mentioned about HDFC Bank and Reliance, both important stocks in terms of levels and weightage sentiment wise. I think they both seem to have posted short-term bottoms. Only if they break the recent close is there a cause for concern. So succinctly put, there is a negative overhang, downside appears limited, we are at supports. Yes, if the supports break, I wouldn't say mayhem and chaos, but yeah, we see some more pressure coming in. So I'd be more stock specific than index specific. If you look at the BSE small cap and look at the Nifty small cap index, they're very close to all-time highs. I mean, that's a dichotomy. The Nifty is down so much, the mid cap is up. Okay, you have you have our flows, domestic flows coming in, but the market breadth, if the smaller stocks and if the BSE 500 and all of those indices are better placed than this, I think it's okay. We don't have to panic at current levels.
Hemant bhai, good morning. Welcome to BTTV. Any couple of stocks that you're looking at which might attract a trader attention on the long or the short side? Anything you want to add to the portfolio?
Yes, Mr. Bhatnagar. I think firstly, there's a clear buy on Tata Motors. We remain safely ensconced in an uptrend and short term, medium term, long term. Now, the thing is, I was assuming because of what has happened overnight, I thought we'd be down. We'd open gap down, which we have. So I've given a buy for Tata Motors at 660, assuming we'd open a bit lower, but that's not happened. In fact, it's gone the other way. So I would say on a small decline, buy Tata Motors at 670. Keep a stop loss at 645, a target of 720. Risk reward ratio 1:2. And the other stock which I like is Tata Elxsi. It looks great on the charts. We've been consolidating for some time. Now it's formed a rounding bottom on the weekly chart. I believe there's at least 1,000-point move coming in the next few weeks. I have a slightly smaller trading call. So one can buy Tata Elxsi at around 76.50, stop loss 74.50, target of 805.
Fair point. Lots of moves coming there as far as the index heavyweights are concerned. Hemant bhai, your view on what's actually changed in the auto space? It was a blowout day for Bajaj Auto yesterday, and it helped the likes of Hero Motors, even Eicher Motors to some extent. Although TVS Motors and Bajaj Auto have been in the pink of health. What's changed And what would be your top two-wheeler pick now?
Well, Mr. Bhatnagar, frankly speaking, two-wheelers seem to be running faster than four-wheelers, but that's on a lighter note. But yes, I think, like you said, Bajaj Auto was a blowout. Hero Motocorp, I wouldn't be very surprised, frankly speaking. TVS Motor has shot through the roof, Mr. Bhatnagar. Bajaj Auto, like you said, phenomenal move yesterday. And Hero Motocorp is, frankly speaking, hatching eggs. We posted a high of 4,092 almost in September 17. Bajaj Auto, TVS Motor, okay, not currently, but even Eicher Motor sometime back posted fresh all-time highs. Hero Motocorp is nowhere close to its all-time high. So it's playing catch-up. The setup is positive. So if you're saying auto stocks, top pick, well, if you give me an option, I'd say four-wheelers, I'd say Tata Motors. If you give me two-wheelers, uh, Bajaj Auto was beautiful, superb setup, but after yesterday's move, I'd probably pick a Hero Moto.
Okay, absolutely. Let's pull up NBCC and see what this stock is doing. Remember, this stock was among the top gainers yesterday as well. Mr. Kabadia, I want to come to you for NBCC. What are the right levels?
Stock is going to 80, and from 80, Tanya, the stock is going to go to 120, but this is probably a 9-month or a longer term point of view. We remain in an we remain in a longer term uptrend. So in terms of levels, the next major resistance level comes in 80. We've taken out 70. So 80 is what we can expect. And it's had a long consolidation correction, high of 134 in 2017. Since then, we've virtually fallen off a cliff, and now we're staging a comeback. And the setup, at the risk of sounding overly optimistic, Tanya, looks positive for probably the next year or two.
Okay, so that's a very clean view on NBCC, 80 first, and then 120. That's from Eamon Bhai. And that's why we always try to get him on air. The views are very clean, very precise, and to the point. To you both, gentlemen, tire stocks, a blowout that was seen in CAT post-it earning has now translated to gains across the sector. Mayuresh, first to you, what's happening granularly as far as the tire space is concerned? Your top pick, and then the same question to him and Bhai.
So, two things. Materially, one, I think, as Hemendra mentioned, two-wheelers running faster than four-wheelers. I think the auto stocks or the auto companies themselves, in terms of sales numbers, are probably at the cusp of good earnings growth. As we enter into festive season, the OEM players, with the kind of order backlogs that they've got, the footfalls that are expected, should continue doing well, which means an automatic boost for tire companies as well. Now, the replacement market is also equally holding up. And what we've probably seen in terms of prices holding up in the replacement market will probably mean better realizations across the OEM and the replacement segment for these tire companies. To top that up, for this quarter particularly, input costs were significantly lower. And therefore, you saw or witnessed a significant margin expansion happening in the case of CAT. And that might get replicated across the entire space as well. Now, the only upside risk here is if crude prices start moving higher, the elements in terms of how the second half will look might be a little bit higher on the cost side as far as margins are concerned, including the likes of nylon tire for fibers, carbon black, so on and so forth. But in my opinion, I think a large part of the inventory built-up that they've probably got should suffice for the better part of this financial year, which means better numbers can probably still get reported by these tire companies with all this rationale and logic behind it. So yeah, we remain optimistic on stocks like Apollo Tires, JK Tires.
Okay, so JK Tires is what looks good to you fundamentally, of course, at a record high on that stock as well. Hemant Bhai, would you sort of step into this discussion and pick out one or two winners from the tire space? We've seen a record high on MRF. We've seen a record high on I think Seat was it,
Yeah.
and the others, Apollo, JK, Balakrishna, all of them are clicking away merrily. What do you like on the charts?
Uh, Mr. Bhatnagar, I like something slightly offbeat. I like TVS Sri Chakra. I think that looks very interesting. This stock is in a very strong longer term uptrend. We currently placed at around 3,963, Mr. Bhatnagar. Modest target would be 4,300. But if you say if I have an option of 18 to 24 months, this stock is going to go to 5,000, and probably at 5,000, I'll tell you, Mr. Bhatnagar, that I'm expecting more. So my stock pick would be TVS Sri Chakra. It's not a shorter term call, obviously. It's a slightly longer term point of view.
TVS Sri Chakra, this is something that I haven't seen for months together. 3963, and of course, it's whipped up like a snake. The price was 3,000 somewhere in the end of September, and we are at 3,900 here. Fairly strong spike. This one's headed for 5,000 Hemin. Which was the other stock that you mentioned at 1,300? I'm sorry, I could not catch it.
I 1,300 rupees stock. My recommendations were for Tata Motors and I believe
Tata
Elxsi.
Okay, okay. So in the tire space, you like TVS Sri Chakra only.
Yeah, yeah.
Okay, Tanya, over to you.
Absolutely. So I think we should pull up RVNL also. The railway stocks have been on a roll, and of late we have seen that stocks like RVNL, they have been in a consolidation range. But I want to come to you first, Mayuresh. For RVNL, it is up 3% today, and the company has received a letter of acceptance actually for civil engineering works. So on the back of this news. So, what are your thoughts when we talk about railway stocks and specifically RVNL?
Tanya, I think the structural story probably remains intact, obviously on two counts. One, the order books that they've got and the burgeoning order book with every passing month, every passing quarter, the kind of orders they're receiving means that the revenue visibility for the next 5 to 8 years is probably confirmed. The second element also is that the margins that are probably coming through and the execution that is probably happening at a decent pace means reasonable operating leverage getting created, reasonable amount of cash flows. Now, the only risk in the next 2 years is if execution starts faltering to a certain extent, and if the receivables start bunching up, you might have a scenario where your working capital cycle probably gets elongated. That is one upside risk for these stocks. And the other element is for sufficing sufficiently in terms of timelines for the existing order book. They will have to ramp up their fixed capacities and their asset base as well. So as they get into a capex mode in the next few quarters to probably ensure that this order book gets serviced, the expectations in terms of the next 2 years, in terms of earnings potential, is probably fully gestated into the price. So from a fundamental perspective, what we are looking at O'Neill is that it's fully priced in. What we are also tracking at O'Neill is the late stage basis of the move that these stocks have probably done, and valuations no longer cheap. So I think if you club all these factors put together, I think fresh investment should probably wait. Existing investors can probably ride the momentum, but you should have your risk control mechanisms.
Okay, absolutely. And I think we should pull up NBCC again. The stock is on a roll today. It's up around 4% as we speak. 73.5 is the level on NBCC, fresh 52-week high, and the top PSU gainer as well. Mayuresh, any picks from PSU space? Because we have seen a stellar rally, in all these PSU names, and we have been discussing PSU space as well on a daily basis. But any stocks that you like at these levels?
So I think most of the stocks that we like names in defense space, railway space, power utility space, including finances like PFC, REC, I think they've run up too much for comfort. So my own sense is that if anybody is a genuine long-term investor, I think you should do a sip in the PSU CPSC index. I think that's the best way to play this stock.
Okay, and what about NBCC?
And
I think reasonable story out there. I think it's always a question about NBCC in terms of expectations of numbers delivery, Tanya, and what they probably deliver. So I think that mismatch probably is something that has probably beleaguered the stock to a certain extent. You've seen good moves from low levels in the last few months. Again, similar story like most PSUs. Very reasonable order book. You're expecting good revenue visibility to come through, expectations of margin stability expected to continue as they execute the better projects going ahead. But a large part, as I said, in terms of actual earnings delivery and actual earnings expectations is something that beleaguers us.
Let's shift a bit focus as far as equities are concerned. To you, Hemant, we've seen a risk of trade firmly in place globally. The Dow is below 200 below 200 DMA. A lot of profit booking is happening in India as well. It's the gold prices that have shot up fairly dramatically. $1822 per ounce on 6th of October, and now knocking at $2,000 per ounce. What are the medium-term charts of gold talking to you, Hemant?
Well, frankly speaking, as of now, it seems more like frankly speaking, a knee-jerk reaction as far as gold is concerned, because one gets a feeling that it's been a smart comeback, but it's moved one way. We are walking into a lot of resistance around the 2010 level. We moved up for almost some 11 trading sessions in a row. So yes, I think it's a geopolitical tension plus a weak dollar, which is sort of driving the gold prices. If you take a longer term point of view, yes, I think we have been consolidating for what years now, frankly speaking. So when the big breakout comes in, that big breakout comes in, I think at around 2050 or something. That is going to take it to $2,300, but that's a more of multi-year point of view. Near term, yes, it's moved up. 2010 is the level I would watch out for. But yeah, it's more near term. Okay, it's very difficult to talk about geopolitical tension, but if and when there's a ceasefire coming in, I think we see a significant cool off. So as of now, the knee-jerk reaction. The setup is it's been non-trending since I think 2020. Yes, when the big breakout comes in, I think it will be a paradigm shift. But currently, we are not there.
Fair point. A rally of from $1822 to $2,000 is fairly significant for traders, and I'm sure they're fairly happy. By then, it's 9:37, and gentlemen, we have a 50-point down tick still on the Nifty, 19,577. This is where the bulls and bears are battling around 19,500, 19,550, and let's hope it inches up further. As far as the Bank Nifty is concerned, there was a mild shade of green here, 43,752. And if you look at the intraday low for the Bank Nifty, this was somewhere like 43,582. So that's a fairly strong uptick there, and some moves coming in from the lower part of the market. Let's look at stocks that are contributing to the change in the Nifty. Okay, everything is in the red. So Infosys is contributing 7 points on the negative side. Hindustan Unilever 6 points on the negative side. ITC 6 points on the negative side. L&T, Mindtree, Bajaj Finance, and HDFC respectively 2 and 4 points each. Anything on the gaining side? Yes, of course. Reliance contributing 5 points to Nifty's gain, 2136 on the charts. Kotak, Nestle, and Adani Enterprises, as also Tata Motors. These are the stocks in the green. Mayuresh has 2 or 3 minutes with us, but a blowout happening on paper stocks. Anything that catches your fancy, Mayuresh? 2 weeks ago when you were with us, you had mentioned Orient Paper.
Something very interesting here, Shail sir. I think the industry itself is highly dependent in terms of water as a commodity in terms of making paper. And unfortunately, because of deficiency in rains in a lot of states, or excess lens thereof, which has created huge amount of infrastructure damage. What you're probably seeing is a lot of unorganized players might actually shut shop, and the power requirements as well. Like a lot of grid power might get shifted because of the heat that you're probably witnessing, either to industries or homes. And therefore, I think the stocks which are reasonably backward integrated, both in terms of these resources, can be expected to do well. Paperboard prices, value-added paper, specialty paper, expected to show increases. Input costs because of backward integration expected to be reasonably stable. So in my sense, I think these stocks will do well with festivities coming across. A lot of packaging is also expected to come through, which will aid. So remain positive on Orient paper, JK paper, West.
Okay. And with that, Mayuresh, thank you so much for your time. It's always such a pleasure to host you. It was a technical glitch today when we could not share your lovely thoughts with the market, as also with our viewers early on in the show. But such is life. And
Thank you so
thank
much.
you so much. We look
Thanks,
forward
sir.
to meeting you again.
Sure. Thank
And
you so
happy
much.
Durga Puja.
Same to you, Shail, sir, and happy Navratri.
Yeah.
Tanya, NBCC is what you picked up 2% higher. And NBCC is what is buzzing on my screen everywhere. I have 7, 8 screens there just showing me NBCC on the day's high, 74.25. The size of the block deals is fairly substantial. 3 lakh 77 lakh shares, 3 lakh 95,000 shares, 2 lakh 69,000 shares, and it goes on and on and on and on. Heyman has already talked about a price of 80. Let's see how that happens. Heyman, when it looks at asset allocation, how are you sort of advising clients in terms of large cap, mid caps, and small caps? We've seen a blowout rally from April to October on smalls and mids. How are you sort of tackling this in your mind in terms of asset allocation within equities?
Well, like you said, we've had a phenomenal move in mid caps and small caps, so there's nothing wrong. But I would say at closer to 20,000, I would say 60% in mainline stocks. You can put 20% in mid cap, 20% small caps, and the last 5%, last 10%, I'd say 4% gold, 4% silver, and maybe a 2% in Bitcoin.
Okay, absolutely, Mr. Kapadia. And I think let's pull up Tanla platforms as well. The company is doing pretty well in today's trading session on the back of stellar numbers. So, for the benefit of our viewers, I would like to mention this, that the company's top line growth that has been phenomenal, and the revenue has crossed 1,000 crore odd mark for the very first time. So, the revenue for Tana platforms, it's up around 19% at 1,008 odd crore rupees. So as you can see, the positive reaction coming in on the stock, 1088 level. That is where we are at this point in time. Mr. Kapadia, what are your thoughts on Tana platforms? What are the levels to watch out for?
Currently, there's a resistance level at 1120. We take that out.
Okay.
We go to around 1180 or so. We've been moving sideways for 7 weeks in a row. Range is between 950 on the downside, 1120 on the upside. So we're looking at a possible, let's say, 7 to 8% move above 1120. So setup is promising. We're above the 55-day exponential moving average. Oscillators on the daily charts have given crossover buys. The volume today, we've just half an hour, 20 minutes into trade. The volume already today on the NSE is highest in the last 6 trading sessions. So everything seems to suggest that Tanla is set for a move, but we need to give a closing of 1120, and significantly so. Today's Friday, last day of the week, so the weekly charts will also be formed, making a 1120 close above that much more important.
Okay, absolutely. And now it's time for us, to shift our gears to the corporate side. And the company on our radar is Coforge. The company posted strong operating and financial performance marked by robust growth and margin expansion. And to discuss the results and much more, we have with us Mr. Sudhir Singh, who is the CEO of Coforge. Very good morning, Mr. Singh, first of all, for taking the time out and joining us here on Business Today Television. And congratulations, good set of numbers this time around. So let me begin by asking you about, the annual revenue growth guidance that you have given at 13% for FY24. I want to know it from you that would you like to maintain this kind of guidance? I'm saying this because macros are unlikely to improve going forward.
That's right. Good morning to you as well. It's good to be here. At the end of the first half, we're growing 16.2%, same period last year. Our guidance for the year is 13 to 16% CC growth. And 13 to 16%, I talked about it yesterday as well, is a number that we're absolutely confident about delivering on. A lot of that confidence also is not just specific to performance, factoring in the macros for this year. If you look at us over the last 6 plus years, every year the annual guidance we've given, we've either met or exceeded. This year should be no different despite the macros.
Mr. Singh, good morning and welcome to Business Today Television. Over the last 10 years, Coforge, which was earlier NIIT Technologies, has compounded at 33% each year. And that's a fantastic return for those who've held on to lofty and stratospheric valuations. Tell us, sir, a little bit more about the granularity of business. For the first time in many quarters, we are seeing a net negative addition to the headcount in the overall industry. The top three, Infosys, TCS, and Wipro, actually shedding staff. What's happening? Is artificial intelligence taking over all software and code writing, or are we missing the wood for the trees?
I don't believe AI has anything to do with the headcount movement that you refer to right now. Headcount movement is essentially for every firm across the industry a function of the growth that they see ahead of them. If you look at us over the last 6 months, our headcount, net headcount, has gone up 6%, which is a very significant growth number. So I would submit that it's not AI, and I really don't see AI as being something that's going to materially drive down the fortunes of our industry. It is more the growth that every individual firm sees. You will find a very wide dispersion. If you were to look at tech services firm, IT services firm across the industry in terms of the headcount addition, you will also see a very wide dispersion in terms of how they've handled their employee base. There are firms like Coforge that gave the annual increment on the 1st of April this year, as they do every year. And then you have others that have not done it. Similarly, when it comes to headcount, our headcount over the first 6 months of the year, net headcount has jumped 6%, largely because we've seen growth and we anticipate continued growth in the future as well.
Mr. Singh, how are mid-cap IT companies different as far as the work business is concerned? I ask this as, a person who's unconvinced with the kind of rally that we are seeing on stocks such as Coforge, Persistent, L&T, Mindtree. How can the overall atmosphere and theatrics of a particular sector be different for smaller companies and be completely different for larger companies? You see pain all around in the IT sector globally, yet the mid-cap IT space in India is outperforming dramatically.
I don't believe all mid-cap IT stocks are performing dramatically. Mid-cap IT also is a fairly wide swath. If you were to look at firms across mid-cap IT, there are firms that are outliers. In general, the mid-caps seem to have done better than the large caps over the past few quarters. But my submission to you would be even within mid-caps, you will find a fairly significant dispersion when it comes to performance metrics. So, if I were to summarize this, I wouldn't really bring every firm and classify them necessarily as being part of a particular cohort and hence growing. Mid-cap for now are doing well. I believe some of them have the right strategy. A lot of them have stronger execution intensity than they've had in the past. And maybe that's been the driver of late.
Okay, absolutely, Mr. Singh, got that. And you have mentioned in your press release that you have signed 3 large deals during the quarter. So it would be great if you could share the quantum of these deals.
Large deals, which we call out every quarter, are deals that are more than $20 million in TCV terms. We signed 3 large deals this quarter, and 3 is off late been around the median number that we've been signing every quarter. Out of these 3, one of them is a large deal signed with a new client. So it's not an existing client where you've signed a new book of business. We've signed a new banking client, and straight off the bat, we've signed a $20 million plus TCV contract with them. The other 2 deals are from the other core vertical of ours. They are with 2 of the leading airlines, one across the Middle East and the other across Europe that we've signed.
Okay, absolutely. And if you could also tell us about the total order book and the 8 new clients, and also, you have mentioned that mid-cap IT companies like yours have been doing well, but now moving forward, going ahead, do you expect the same kind of performance? Because given the kind of headwinds that we are facing for mid-cap ITs, for large-cap ITs as well, what is your outlook going forward, and will the momentum sustain according to you?
Well, I can't speak for all the other mid-cap IT firms, but our performance over the last 6.5 years, you talked about 10 years performance and returns, but if you look at us over the last 6.5 years, every year when we start the year, we give us certain guidance, we meet it or we exceed it. We are crystal clear. This year, the macros are very, very tough. Despite the tough macros, at the beginning of the year, we said we will grow 13 to 16% in CC terms. At the midpoint of the year, we're growing 16.2% in CC terms, and we believe we will deliver on the macros, on the guidance that we have. So I can't speak for the mid-caps, but we are absolutely convinced. At the end of the day, in this industry, it's less to do with strategy, because strategy tends to be the same. Large cap, mid-cap, small cap, you can parse it, cut it, analyze it any way you want. Growth in this industry is essentially a function of execution intensity, not just signing large deals, because everybody signs large deals. But firms that actually deliver revenue growth in subsequent quarters are firms that not just sign a lot of large deals, as does Coforge, but also firms that are able to retain the book of business that they signed in the past. And that, I suspect, is where the rubber hits the road. So again, as I said, I won't necessarily bracket our performance going forward with mid-cap as a sector itself. We perform for 6.5 years. It's not a 1, 2, or 3 year success story. And we will continue to perform because of the execution engine that we built in the years to come.
Yes. And Mr. Singh, that's fairly visible on how your stock has appreciated over the last 7, 8 years. When you talk to your main clients, especially in the US geography, do you see some pricing pressure coming towards Coforge? And what are clients actually telling you? We have these, periodic fears emanating from the US in terms of an impending recession, and that impacting negatively on global IT and especially the Indian geography. What has been your gist as far as interactions with top clients are concerned on pricing?
Well, pricing clearly is under pressure across the industry because everyone is scavenging for growth and everyone is willing to throw everything at new revenue streams that can be done. Having said that, our margins this quarter grew sequentially 160 bips over the previous quarter. In quarter 3 as well, which is a shorter quarter for our industry, we again expect our margins to grow by about 100 bips plus. So there is pricing pressure, but there are a lot of cost levers right now that can be activated to more than offset the pricing pressure that exists. Again, as far as the broader market is concerned, the broader market continues to see a tough demand environment, but that's the broad market, that's the broad brush that analysts use. In sectors like banking, which are supposed to be under significant pressure, we continue to sign large deals because there are specific subsegments. Payments is a great example. Risk compliance is another example, where large deals, where revenue streams continue to go right ahead.
Right. Mr. Singh, our final question to you, sir. When you look at the globe, you see crisis in Europe, which is now getting problematic in terms of how the Middle East has flared up. And of course, the US geography has been in terms of how it's battling inflation and other fears in a bit of a pain. For the entire software sector, as far as India is concerned, what kind of growth numbers do you think the industry will clock in the coming 2 financial years? Is there more pain ahead?
I would actually stay away from trying to being a spokesperson for the industry. But what I can tell you is your analysis is correct. Demand environment, you can parse it across the US and Europe, is tough. And I suspect the industry overall might struggle. I can talk about our numbers. We believe this has possibly been one of the toughest years over the last 6 to 7 years since the new management at Coforge came in. And yet we've delivered 13, 16%. So our intent going forward is going to be to at least set this as a threshold and then to build on it whenever and if the macros improve.
Mr. Singh, let me just press you a little further here. Since we are sitting in India and we have no access to what European CEOs are thinking, we only hear it piecemeal or read it in reports or in newspapers. That Europe is not what Europe used to be 15 years ago as far as IT is concerned. There is a contraction across the board, and it's now the UK geography that is seeing more pain. Are these statements having some merit?
Well, at a macro level, I guess you're right. When I look at our client base in UK is more centered around airlines, airports, banks, and insurance. Within that segment, at least the client cohort that we work with, we still see significant spend ahead. And more than spend ahead, our growth over the years has largely been on the back of taking wallet share away from incumbents. So our strategy will continue to be to continue to focus on wallet share increase on a go-forward basis. If you look at us as a firm at $1 billion, slightly more than $1 billion in revenue terms, we are still not even 1% of the IT services market. Actually, I'd be surprised if we are even 0.5%. So for us, a good year when the industry does 7 to 8% growth, or a bad year when it grows 1 to 3%, beyond a point does not have a material impact on our revenue growth numbers.
Okay, absolutely. On that wonderful note, thank you so much, Mr. Singh, for explaining everything so patiently and for being with us here on BTTV. And good luck to you for the coming quarters as well.
Thank you very much.
Okay, now, Shail, back to the markets. I am actually watching this 19,512 level that you mentioned in the beginning of the show. That is, Thursday's low. And that is still intact on Nifty. So over to you for the quick market wrap.
So Tanya, I think we have more pain ahead. None of the index heavyweights are showing any sign of reversal or strength. My own understanding is that slowly but surely shorts are getting built up in the system. It's going to be choppy and volatile, mainly because it's the weekend. And of course, traders would be very, very hesitant to take long positions here. Given the scenario in the Middle East, what happens over the weekend is completely in the dark. Remember, there is a ground invasion due. And it's best not to stick your neck out on the long side. Stocks that are ticking away merrily are not the ones on which sentiment depends. I'll give you a very brief example. The all-time high list today has two stocks from the Nifty, Bajaj Auto and Nestle. They are not at all index heavyweights as far as the Nifty is concerned. If you look at the broader markets, there is nothing much to speak of. There are no volume buzzers which you can, take faith in. So it's going to be a nice, mild, flat day. Let's hope 19,500 holds, and then we begin Monday on a fresh note, Tanya.
Absolutely, Shail, and I think it's going to be a flat and volatile day. But have a great weekend, and thank you so much, as always, for joining us on BTTV. And with that, it's a wrap. But lots more coming up for you. Don't go anywhere. Stay tuned, and many thanks for watching.
a hug and a handshake, sealing a message of solidarity between the United States and Israel. US President Joe Biden touched down in Israel today at perhaps the most crucial stage of the Hamas conflict, hours after a horrifying bombing of a Gaza hospital that killed over 500. But that did not deter Biden from expressing his strong backing for Israel and even a public statement on who is behind the hospital horror.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there not sure. So we've got to overcome a lot of things.
Israeli Prime Minister Benjamin Netanyahu, whose bonhomie with Biden was visible from the tarmac to the meeting room, thanked Biden for all the support.
First visit of an American president in Israel at a time of war. It is deeply, deeply moving. It speaks to the depth of your personal commitment to the future of the Jewish people and the one and only Jewish state. So I know I speak for all the people of Israel when I say, thank you, Mr. President.
Biden repeated Israel's Hamas-ISIS comparison as well.
Terrorist group Hamas has slaughtered, as has been pointed out, over 1,300 people. And it's not hyperbole to suggest slaughtered. They're committed evils that and atrocities that make ISIS look somewhat more rational.
Biden